Good afternoon. This is Brian Shannon from AlphaTrends.net. Today is Monday, the 12th of May, 2008. The market's closed, and the S&P 500 finished with a nice gain here today, up $1.60 or 1.15%. Still below this trend line and below the declining 200-day moving average on the negative side. But on the positive side, we are continuing to see this pattern of higher highs and higher lows as the market has held some important support down near 138 and that the 20-day moving average. So that's very encouraging. Today's volume was a little bit light, but I wouldn't read too much into that as price is the only thing that pays, and that's where we need to focus most of our attention. As we saw last week, it looked like we were starting to see a pattern of lower highs and lower lows, and it was back below the declining 5-day moving average. Friday in particular took out Thursday's lows and was stuck basically below that all day. But today, a very nice turnaround. It got back above that 5-day moving average, and it seems as though the buyers don't want to go away. They keep sucking shorts in here. The market holds above important support levels, and then we get another thrust higher. So, as you know, I've been a little bit concerned about this market recently, about just the fact that it's run as far as it has, as fast as it has, up to key levels on these longer-term time frames. But again, the only thing that pays is price. We still have to be aware of the overall picture. But if you saw the post I had made on Saturday to my blog, I had shown charts for about 50 stocks, and these were ideas that I was looking at as potential trades for the week. I think 48 of them were potential long trades, and only about 6 of them, I think, were potential, or maybe 8 of them were potential short sales. And it's not as though I was looking for longs or shorts. I was just listening to the market, and the market was telling me there were better long setups this week, in spite of my concern of the overall market. And when it comes down to what you're trading, you have to focus on the trends of what you're trading. And again, there were some very strong stocks in that list today. So hopefully, you found that useful, and I'll continue to do that maybe once a week or so. The S&P 500 here on the 10-minute time frame, though. Importantly, we're back above the 140 level. It'd be nice to see that hold now. That's also where we see that 5-day moving average. So that takes on further importance right now. And again, the larger levels are up near 142, 143. That's the December lows, the 200-day moving average, and the downtrend line. For the IWM, this market finally closed above $73 a share. Now, again, you can't just run on and buy it because you think, well, it closed above 73. We've still got this market. We took out the downtrend line. That was a good thing last week. We're still stuck below the declining 200-day moving average. The weekly time frame, it's not convincing yet that it's healed. 73 has been an important level. It's very encouraging to see it back above there. Let's see if it can hold these gains. When it's extended like this, you have to play a strong defense. The market has held important levels of support here at 71 to 71.25, and as long as it continues to hold up, then we have to give the benefit of the doubt to the buyers and just be careful as far as what you're trading, and be sure to exit quickly if the positions start moving against you. NASDAQ was up 88 cents or 1.83%. So we do have support now found at this 200-day moving average, and that's a key psychological event, I think. That a lot of people are looking at this saying that the longer-term trend, the buyers are back in control with it above the 200-day moving average. So as long as it's holding above there and that acts as support, it's very encouraging for the longer-term recovery of this market. And very impressive here the way this market, it broke the trend line on Friday, but again, breaking a trend line only says that the rate of ascent has slowed. It doesn't mean there's a reversal. We saw the lower highs, and we saw support forming near that $48 level. I said basically below 47.90 to 48 for more than 30 minutes or so. Then we want to be very concerned. However, the market instead got it back above that 48.70 level that I said that if it gets back above 48.70, looks like the buyers may be back in this market. And now here we are at highs. So, this market basically we're coming up to is close to unchanged as we've been all year. And again, the market acts very encouraging here. So just continue to play a strong defense, and if they start moving against you, have your exit strategies known in advance.